In the depths of a crypto ice age, we'll call it an ice age, not a winter, it's easy to lose sight of the promise of blockchain technology and of the crypto space as a whole. People start to talk about it being over and that it's going to zero and that it can never come back. But there are people who have been here since the very beginning. We're talking about the Satoshi days, and who have been through all of the bear markets and winters and ice ages and have seen crypto come out on top, and who are actively investing and continuing to build the future of this space. Two of those people are from the Bloq, Jeff Garzik and Matthew Roszak, absolute legends in the crypto space. I've had them both on here a number of times before, but can't wait to finally have them in the same virtual room. You guys don't want to miss this one. Let's go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of All Streets. Before we get started, please subscribe to the channel and hit the like button. Now, it would be hard to find an OG more OG than today's guest, Jeff Garzik, and of course his partner, who, if he didn't know Jeff, probably would have been considered one of the oldest OGs of all time, because he came at the late date, I believe, of 2012 to the crypto space. But both of them, as I said, have been actively building in this space for almost as long as there has been active building in this space, and continue to do so. They have some very exciting developments, things that they're continuing to work on that are largely getting lost because everybody is concerned with bear markets and price and macro and the Fed, all things that anyone who bothers to zoom out will understand is completely irrelevant. I'm going to go ahead and bring both of them on right now. I've got Jeff Garzik and Matthew Roszak. Gentlemen, thank you so much for being here.
Thanks for having us, Scott.
Hey, Scott. Good to see you again, man.
Good to see you both as well. So first of all, the most important question I can possibly ask anyone today is, have you ever heard of Bitzlato before?
That was the first time for me. Yeah.
Right. For anyone who missed it, the DOJ made a huge announcement yesterday that they had an internationally coordinated prosecution of something in the crypto space, and people started to believe that Binance was going to go down, or that we were going to get new laws, and it was Bitzlato, right? As we watched Celsius, Voyager, BlockFi, 3AC, Luna go down, they caught the sinister criminal enterprise of Bitzlato. But doesn't that show you kind of how nonsensical still the outside view of this space and the way that we're being approached by regulators and legislators is? Bitzlato?
Yeah, it was surprising and kind of underwhelming, especially how you put it. You know, all the calamity we've seen this year. I think, you know, the pacing of that, it takes longer for them to catch up to the pace of crypto, pace of technology, and all that stuff. So I'm sure we'll see more known folks getting called out. But yeah, that was super underwhelming. I was expecting something a little bit more saucy there for sure.
Jeff?
Yeah, my Twitter was full of jokes, I admit. You know, Jared Leto's brother Bitz was just arrested and stuff like that, because nobody had ever heard of this exchange. So that was the tenor of the commentary. I think, you know, in the broader macro, we're all kind of, you know, sitting back and building while, you know, metaphorically having a TV in the background with the SBF FTX show and all its, you know, fallout and accoutrements playing in the background. That's kind of metaphorically how my workday goes. Is you got to tune a little bit of an ear to the crazy, but you got to focus on building at the end of the day.
So let's talk about focusing on building. Obviously, you guys founded the Bloq together, have been working together for quite a long time. Has anything in this bear market, or crypto ice age, as I referred to it earlier, has any of that impacted the vision or anything that's actually being built, or is it largely just noise because prices are down?
Yeah, I think it's largely noise. Prices are down, but it's also, you know, Darwin has entered the room, right? A lot of cleansing of the leverage and, you know, some of the, I would say, shenanigans in the space. I think the entire lending market in this space is getting reset. That's good. It's also pressure testing liquidity, and on top of that, pressure testing the psychology of people's intestinal fortitude on crypto. And, you know, this is like we know this, every 3 or 4 years, this industry tests you, right? It's like, 10 steps forward and then 8 steps back. Most people do not want to be on that roller coaster. But if you hold on for the medium to long term, because that's the secret in crypto, it's like just have it be a long term play, and all those ups and downs will kind of average themselves out, because they're big ups and certainly big downs. And so I think we're in this interesting moment where the initial time I kind of felt an industry wide kind of punch like this was with Mt. Gox. That was pretty, unsettling and rattled everything, top down, left, right. It's what instigated Losky to do the New York bit license, and all that kind of stuff came out the other end of Gox. And then seeing this with FTX, super underwhelming. It was just fraud. It was terrible. It was, at the same time, the calamity it gave this industry, the black eye gave this industry, is going to take us a while to kind of get that back, because we had institutions, governments, big enterprise, a lot of folks leaning into this in a good way. And now I think there's people are double checking their thesis, and then I think it's that classic 10 steps forward, 8 steps back in crypto, and that's kind of the moment we're at today.
For the hardcore, crypto OGs, we definitely think about the not your keys, not your crypto kind of mantra. We think about there's been a lot of centralized exchange failures, and one of the themes is decentralization has actually come out of this looking a little bit better, I think, than centralized exchanges. And so in some ways, we're quietly whispering in the Bloq halls that it's a DeFi renaissance, because DeFi and its thesis really proved out this was the anti-FTX. And even in the summer of 2020, we saw some of the SBF Alameda shenanigans in DeFi. So we kind of saw SBF's true colors 18 months to 2 years before everyone else, and knew to shy away, and knew to focus on decentralization and focus on building. And I think that was the right call in summer of 2020, and it's still the right call today, I think.
And it kind of is the takeaway. The takeaway there was, DeFi worked according to plan. Everything that was engineered well worked well, and then the stuff that was offline in documents and people's desk drawers, they're like, we should probably see what the collateral is for this loan. And I think everybody played catch up this year. But going back to Bloq in terms of how that tests our thesis, and it amplifies our thesis in many ways, because as Jeff said, it hardens the thesis of DeFi, of non-custodial, of this whole element in crypto that's super important. And that kind of got lost in a way, to be honest, with a lot of the ways in which builders in this space, and some do this better than others, are trying to engage other folks and be more salesy, and some of the deficiencies in the tech, when it's centralized or whatever, that's a bad combo. So if you have DeFi gadgetry and better wallets and better onboarding, I think that kind of deflects a little bit of the risk of what we've seen historically. But again, the form factors in crypto are still not as intuitive as we want them, so we still have a lot of work to do, and that's where I think we're leaning towards a lot of that stuff at Bloq.
So does that mean we effectively have a massive UX UI problem? Go back to grandma who can't use it, and that's our biggest stumbling block at this point? I mean, to everything that you guys said, every time we've removed humans from the equation, it seems to work really well, right? And every time we put them back in, we get FTX and Celsius and Voyager and BlockFi and the same sort of repeated mistakes of other markets past, right? And I think it's time that we need to get past the crypto market and start talking about the technology, which is what you guys are saying. But what can we build so that people actually use this stuff? I mean, I'm sure you guys are doing quite a bit of it. Talk about some of the things you're excited about that are being built that might actually move us in that direction.
I think we've got a handful of elements that we've been building and building towards. One of which is kind of a baseline element of staking in nodes. But as these networks push to be more decentralized and trying to create incentives for their networks, et cetera, these nodes are very important centers of gravity for all these networks. And then the staking elements are another way to find yield. And I think a lot of institutions, if you think of the baby step of institutions engaging in crypto again, it's probably melting some cash into crypto and staking it. They're validating, they're participating, they're getting a yield. And that's kind of like a great baby step for institutions to kind of see these mechanics work and participate. I think from there, you get more sophisticated with DeFi, but I think that timeline has been kind of pushed out. So I think adoption of staking and these node networks is going to continue to be a big thing. At Bloq, we have Bloq Cloud, which does staking nodes and data, and we've partnered with lots of institutional players in that space. We'll be making some announcements, I think, in the next month or two, hopefully the next month on that particular platform that we've built and the partners that we've surrounded ourselves with. So we're really excited about institutional staking, and it's on one hand kind of simple. On the other hand, it's a trapeze act to get any Fortune 100 company to do that. But that's a huge opportunity in this space. It continues to be. And then the other piece I'll mention, which is kind of like an interesting way in which things are built and found at Bloq, where Jeff, about this time last year, had a tweet about a container you could build for crypto, and you could put NFTs or tokens, et cetera, into that container. I could send it to you, Scott, and instead of sending you singular transactions, I could send you all in one batch and pack it into one capsule. And so our team built this module called Capsule off of Jeff's original tweet and GitHub link. And that's how kind of some of the innovation within Bloq happens. We're constantly iterating on what's around the corner, and then somebody gets inspired by a piece of tech that Jeff built and kind of extends it, commercializes it, et cetera. So with Capsule, this primitive that we built, you could shuttle multiple assets, and then. So think about this. The thing that we're working on there is rerouting and getting finality on transactions. So if I send it to you, Scott, but I sent it to your wrong address, I can now reroute it to your right address.
Oh, wow.
Or I could say, I'm going to send it to you, but you can't open it for 3 months. And so you have this whole open design space on composable assets, so what I stuff in here, and then composable transactions, how it gets to you. So the composability at both ends is something that could help with the safety security of transactions. Obviously, there's safety security concerns on one direction, but on the other side, you kind of have more control when you're parting with crypto, because everybody, I think, has that moment where right before you hit send, you kind of have that moment of truth, and this will help kind of manage that a little better. Yeah, to this day.
I love. Didn't you guys call it Tupperware for crypto? I remember seeing that. It's
kind of like a shipping container for crypto or something like that. You can put whatever you want inside. You can seal it and lock it shut. You can reroute it to different destinations, and eventually you can crack it open, and there's your ERC20s, your NFTs, your other digital assets.
That's extremely cool. Matthew, you talk about institutional adoption. It feels to me like yield has become a 4-letter word in crypto, right? And that everybody's staying away from anything called yield, even to some degree Ethereum staking, because they're probably conflating it with what happened in CeFi. And of course, you have short-term bonds yielding over 4%. So I guess the hunt for yield just isn't that difficult right now. But are you still seeing actual interest right now, or is it theoretical? Either of you can answer, in institutions coming in and actually hunting for yield, parking their money here and just waiting?
I think yeah, a couple of things. One, it depends on your definition of institutions. I think crypto institutions, people that have MetaMask are in the game, are absolutely looking and optimizing for yield because a lot of liquidity is gone. So a lot of the incentives and yields in particular networks are better. So the crypto institutions, absolutely. There's a lot of funds that are being raised now. We're at a market bottom, so they want to do these DeFi funds to really amplify exposure into this. And so yield has been a four-letter word, but in DeFi, it's actually been very, in a particular way, sustainable because you're getting yield off lending markets. But it's getting pressure tested. This is the first time we have a macro, dynamic where it might be better to buy treasuries because it's risk free, so historically, a lot of the incentives, a lot of the bootstrapping of these networks was meant to incentivize people to just try and kind of get into it. Now, again, I'll go back to my Darwin has entered the room. There's a clearing now of liquidity, TVL, and yield, and I think we've gone through a lot of that over the last couple of months post FTX. But now it's a lot clearer to see where to obtain some yield, and there's new staking projects coming out. So I think it's evolved in a good way, a healthy way, especially through this last 60 days of turmoil.
Yeah, there's definitely been a separating from the wheat and the chaff, the signal from the noise, kind of a little bit of a clearing out, like the DeFi summer of 2.5 years ago. There was a lot of noise, and now some of the survivors that are left, I hope, are bubbling up in terms of quality, and specifically. That's two open source projects that Bloq has been spearheading: Vesper.finance, and metronome.io. And two of those play into that space very, very pointedly and very intentionally. Having lived through 4 market cycles now in 12 years of crypto, it's again, I come back to Matt's kind of Darwin at work. Is we go through these cycles rapidly, but again, the quality gets separated out at a market bottom, and the people that are left swimming in the pool after a lot of the water goes out are the lifers like us who are dedicated to the space and who see that. And I know people are maybe tired of hearing this, but I still believe it. We're still early. We are absolutely still early. We're still talking about, BNY Mellon or JP Morgan experimenting with Ethereum staking. I'm just making up those names. They're just now putting a toe in the water, and they're not even at the point of using DeFi, which is the next logical step. So they're just now getting, they were comfortable regulatory wise, institution wise with Bitcoin. That's now expanded to Ethereum. That's now expanding to some of the staking gadgets, proof of staking, etc. Institutions just move far, far more slowly than crypto degens, retail, just about every other player. And I think the FTX SBF situation pumped the brakes a little bit on that. Not a lot. We're still seeing engagement from institutions, but I think there's a new level of due diligence in the room of, is this project real? Is it audited by multiple auditors? Is it beaten up left, right, and center? Or is it kind of a CEX, CFI, bleep show?
You can say shit show here, by the way. It's fine. But you guys are talking to a point that I've actually been sort of exploring and discussing here. Is I think that we cheered for the idea of institutional adoption, and we've largely now gotten that from the biggest institutions. When you're talking about JP Morgan and BlackRock and Fidelity, it really doesn't get much bigger. The problem is, I think that what we were cheering for ended up being institutions showing up and treating it like every other asset class that they're used to. And that I just want to change the term. We need institutional participation, right? We need what Matthew's describing, which is where they get here, they show up, they actually use the technology, they participate. It makes them long-term stake, having a long-term stake, no pun intended, in the industry, rather than it's just something that they can short when they see an opportunity or something they can sell when they need liquidity. How do we, first of all, is that an accurate assessment? But second, how do we jump that chasm if it is? Because I think we got what we wished for and should have been a bit careful with these institutions.
I mean, institutions are complicated because, blockchain, Web3 use cases, it's very difficult for them to adopt in any material way because, they have quarterly reports, they're regulated, they're public, and they're more, they have antibodies on risk, and they're just super risk averse. And quite frankly, a lot of the technology that is on the table has been, in the field for months and years, not decades, like they like to see most of the time. And so I think the adoption curves are weird. I think on their balance sheets, they've been, having BlackRock and Fidelity and everybody start to adopt the assets is cool. Adopting the technology, I think, is going to take a lot longer, given volatility, given hacks, given all the maturity of the networks. But once that happens, I mean, this, will melt the face of finance. Let's be honest. It's turning every bank and credit card company into software, and it'll all, be on our supercomputer in our pocket. So they need to pay attention. They can't elect. This is like media companies in the late 90s when the internet was coming and saying, oh, it's, we got journalists and printing presses and all this stuff. We got a network. And I think banks certainly see the same dynamic. And so, they're not going to go without a fight, and they're going to have some regulatory arbitrage to play through. But ultimately, when they participate in any meaningful way, there'll be more regulatory clarity. And I think that's where I think it's a good excuse for institutions as well right now. Instead of like being super innovative and engaging, they're saying, hey, it's too much risk, I'm going to wait for more clarity. And there's a little bit of that going on right now. That's the most amplified version of that in a while.
Though to call out Fidelity for being really amazing, forward-thinking, experimentative in crypto. Several years ago, the CEO, Abby Johnson, had a Bitcoin miner on her desk. They've been, I think for a big institution, a big bank, they're really an example to emulate. They put a toe in the waters the right way. They experimented internally. One of the projects in Bloq's history, we built Fidelity's first digital asset wallet for Bitcoin. So we got a little bit of an inside view several years ago. And they first stepped in on the charity side, then they spun up a product, then they spun up another product, and really took a risk-adjusted staged approach. But at the same time, they were the first ones in the room, taking that first, second, third step, and really made a commitment to kind of the decentralized digital asset future. So that I think is the example in the room to emulate institution wise. Is they're a major institution, they're regulated, they're public, and at the same time they're within a sandbox, innovating and taking some risks and looking at what we obviously think is the future of finance.
So true. I mean, they're the ones who are participating, right? They're mining on a grand scale and basically participating in every single facet of the industry. So they might not get left behind, like Matthew talks
but it's
about.
It's an important look, Scott. I think what Jeff mentioned about Abby, it's like when I think about our engagement with large Fortune 500 institutional clients, it's if the CEO doesn't speak crypto, then the organization has no idea what to do. It has to be a top level down today because the way the hierarchies and the energies and the risk management is at these larger companies. So it's got to be top down. If it's just like innovation group or whatever, they are very limited in that. And so the best gauge of institutional adoption is can the CEO speak crypto? And it's hard because it's a complicated tech.
It just made, I had to laugh because we know that there's JP Morgan coin and they're copywriting or trademarking wallets, and they're literally allowing their customers. But Jamie Dimon is the hugest hater in the world. Could you find a more antithetical position from the CEO to the company's actions than JP Morgan right now?
Yeah, I mean, I go back memory banks to Peter Thiel's geriatric comments about certain, folks like Warren Buffett and others looking at the technology a certain way, certain, background and history and how they think about stuff. But, Jamie Dimon says one thing, it seems like the bank does another, which, something that's interesting to see. So yeah, I think actions are probably more than words, and they got plenty of action there.
Speaking of Peter Thiel, did you guys see that it came out literally today or yesterday that they had wound down their entire 8-year Bitcoin investment in his founders fund for a profit of $1.8 billion earlier this year?
I mean, he's the world's greatest trader if he sold at the top and bought at the bottom, that you want to buy low and sell high. And apparently that's exactly what he did.
Now we just want to see the news about them buying again over the last over the last month. So
did he do that out of his 401k again?
Right. It was Facebook and his 401k that he invested in, right? Like billions of dollars in a 401k that's supposed to be $5,000 or $6,000 a year. The guy's got some skills. So nobody can debate that. So we talk about these huge institutions coming, and Matthew, you say obviously that the banks are on notice and they're going to get crushed by this technology. So what then does this look like for the average person in 5 years or 10 years? Let's maybe it's even 20. When we're at full maturity of the potential of everything you guys are building, what's the vision on a day-to-day basis for your average person who no longer has to go to their bank and can just use these things? It can earn a yield and pay their bills. How does that work?
I think, back to your point about UI UX is, I think crypto powers a lot of what you just said under the hood invisibly. I've often said when crypto succeeds, you don't know that you're using crypto. You just, you're using freedom. You're using technology that's self-sovereign, and you can elect to be banked or not banked, or use, legacy institutions, not legacy institutions. But increasingly, you'll just engage with a product that's decentralized, audited, trustworthy, and you won't even blink an eye because it's all, to use a word from my former Linux lifetime, it's all plumbing. And really what we are plumbers. And if we've succeeded, blockchain is invisible. If we've succeeded, crypto is invisible, and you just have self-sovereign freedom. And so I think that's the ultimate iteration of this is not to get too far into the future, but Wall Street eventually runs a lot on blockchain rails. I know we've been saying that for 10 years, and especially with like centralized blockchain and all that stuff. But I think the legacy world's coming around to public, open, permissionless networks like Bitcoin, like Ethereum. And as a neutral referee, as a level playing field, as something that that if you're a player and there's another player, you're both playing by the same rules, and that is a very powerful fundamental factor of the plumbing. But again, it's just plumbing. And so I think for retail users, there'll be, literally billions of retail users using crypto. It'll be stablecoin instruments. It'll be some volatiles like ETH and BTC. But a lot of it, again, will be hidden behind really advanced wallets that possibly AI powered, that you say, well, I'd like to invest in these areas and I'd like to protect against these risks. And the automation just kind of carries the day with your instructions in mind. So that's a 5 to 10 year look, I'd say.
Yeah, no, totally agree. And I think a lot of it is wallet based. The wallets are really important browser to all this stuff. Especially the identity piece, which has been an elusive component of Web3. Everybody talks about it. We need it. It's been a kind of a clumsy approach to how we ultimately do it, but that's going to get, I think, going to get solved with Web3 tech, and then our wallet with assets and everything else. And I kind of go back to that one little soliloquy I had on the 4 pillars of crypto, tokenization, financialization, which is DeFi, orchestration, which is DAOs and kind of communities. And then the last piece, which quite frankly, with, OpenAI and a lot of these other things, this automation piece. And then when Jeff was mentioning, like, it kind of works for you, like having AI with crypto is very explosive and in a massive advancement kind of way, because you have these orchestration engines. Like the AI will give you smarts to say, like, well, you should probably sell this token and just automatic and buy this token, or we'll have certain permutations or certain logic in there, and we'll work on that logic in that particular box. And so I think these orchestration engines that could be used off the shelf from somebody's community, or it could be your own, and you start to develop the way you want to see the internet. Fast forward that, it's like, well, what internet are you connecting to? And maybe it's like your own personal node. And in your node, you have your wallet, you have your money layer, your identity layer, you have your own Siri. So you ask it questions, it informs you, it teaches, it's your own personal version of that. So it doesn't get externalized. If it does and wants ads, you get paid for those ads. And so that I view this like wallet as a soft layer, and then this kind of network layer as this node of for yourself on how you engage in kind of the new internet. So that is probably more of a 10, 20 year, but the wallet piece is less than 10.
As a creator, I write a newsletter every single day. I've seen a lot of technology come and go in the last 46 years of my life. ChatGPT for me was arguably the most mind-blowing experience that I've had. I don't know if that's just because it's so consumer facing and we can actually touch it. Maybe behind the scenes, AI has been doing much more mind-blowing things. But I feel like we just leaped decades ahead with AI with the release of ChatGPT. Even for me, just acting as my editor or my first draft or things, it's just incredibly powerful.
Absolutely. I've been playing a lot with it as well. It's fantastic for generating a lot of content. I do trip up on its feature of I have to predict the next word, which is fundamentally how it works, even if I start making up stuff. And so sometimes
you're
it's
trolling
like,
yeah,
fact. Oh, now it's running off into fiction land, and you gotta rein it back in. And so I'm not ready to trust it with my assets just yet. But that and Stable Diffusion, the AI art, was absolutely mind blowing. You just type a couple words in and it creates for you, and that's just upending every end of the creative world, including the crypto NFT world. So it's world, no exaggeration, both of those are world changing. And ultimately that is going to feed back into kind of the robo advisor asset management kind of mindscape, where it's going to say, I advise that you trade out of BTC because it looks like it's a top and Peter Thiel agrees. So, yes, no, should you follow Peter Thiel's trade? That kind of thing. You'll have a conversation with your robo asset manager, much like you have a conversation with your ChatGPT instance, but it'll stay grounded. It won't, start making up fiction, and it'll have access to your assets. And so once it gets your approval, everything else is just kind of happen on that orchestration and automation side of things. So it's an exciting future, but I'm metaphorically buckling up because we're all about to go 200 miles an hour.
But are we going like full Skynet here? Because what you just described is extremely exciting until the day when it doesn't ask for your permission.
Oh, so true, so true. Yeah, in all honesty, I whenever anyone says the robots are going to take over, I disagree. I think that humans will get more and more creative, and that'll be kind of the human value add. Economist Tyler Cowen, in his book The Average is Over, recommended read, he talks about man-machine teaming as being kind of the superior model. And so, the AI doesn't do anything interesting without the human sitting there prompting it. And so you turn into the new wizards of the next decade are going to be the prompt wizards who know how to speak these magic incantations to the AI art engine or the AI chat engine and have the right answers spit out. And that's a skill in and of itself. If any of the listeners get into AI art, it's not just draw me a picture of a cat. You have to be very explicit in, like the art style and the drawing style and all these other details. You really have to know some art just to produce AI art. So it's not kind of a push here dummy type experience. And again, I think these prompt wizards, these man-machine teams, are going to be the ones that ultimately come out on top versus either humans or AI alone. So, humans will always be on top.
You think so, Matt?
Well, I don't know if your question was, is AI or a virus going to kill humanity? But I like Jeff's answer.
You jumped a bit ahead, but sure. Go ahead.
I like Jeff's answer. It might be a combo platter on that scale. But yeah, I mean, game changer with, OpenAI, and the data set they've been using is super interesting, and it's about to expand, whatever, 1,000x from what it's ingesting and spitting out. But I think it's a game changer for education, around the world. Getting the right answer. I think it's one of those things that when I first tried it, it brought me back to first email, first Bitcoin transaction. I was like, this is one of those elements that we're not going to forget, and it felt like that for sure.
I can only speak anecdotally. I was a DJ for 20 years, and I started, carrying the records around and the turntables and everything. And then one day, all of a sudden, you could start to do it on computers, and I still stuck to being analog, of course. And it evolved to the point where the software would do everything for you, but you still had to have a person standing there in front of the party, reading the audience and choosing what the next perfect song was going to be. And that still hasn't been replaced, even with 15 years of advancement in that music technology. And I think it's probably a very similar thing to your point. Even if you've messed with ChatGPT, one word in your prompt can vastly change the response that you get and the tone that it comes in. So I do think that is absolutely true, that there will be the human element, but it is a bit scary, especially now when you put your money together with it, right? To what you were talking about, Jeff, before. Now, I mean, that's a very serious level of trust, and both of these technologies are evolving so much faster than humans can really keep up, it seems. So, I mean, should we slow down, or should we just let this thing go and see what is created? I mean, Jeff, you're building this stuff, so
it's a fair question, but at the same time, I think that's a little bit of a fantasy question, in that the world never slows down. And so should we, could we? I don't know. We can't. So I never ponder the question. But kind of, the way we think about Bloq, one of the ways I describe Bloq is a factory of factories, such that we have, an amazing group of builders at Bloq who are like Matt and myself, looking around corners and trying to understand what's the next human experience where we can really be additive. And that's how we arrived at this kind of factory of factories model, where again, for example, 2 years ago, we looked at DeFi, the DeFi summer, and we saw a lot of very low quality yams and hams and other projects, and said, what happens if we raise the quality level on yield farming and look at only quality yields and audit this thing 20x, that sort of thing. And so we cranked the factory crank at Bloq and bootstrap Vesper. Similar story with Metronome. metronome.io, which just released a beta recently. Everybody check that out. That was another situation where we looked at synthetics, MakerDAO, and some of the other synthetic DeFi gadgetry and said, we can kind of do it better. So let's turn the factory crank and create a project that is really relevant for this space in 2023. So that model, we churn out projects, spin outs, etc. There's Lumerin, which is a Bitcoin mining hash power marketplace. Matt already mentioned Capsule, kind of a shipping container for digital assets. Arch, which is our node and staking infrastructure. All of those really came from that core of Matt and myself looking at what do we want to build, what is the most relevant, most impactful, and most interesting and intellectually stimulating things to build. We have the team. Let's look at that shining star and build towards that. So that's really Bloq in a nutshell. Is kind of a factory of factories. And where does that, kind of tie into ChatGPT automation, stuff like that? Is at the very beginning, late 2015, when we formed Bloq, we were thinking about orchestration, automation, and how all that applies to crypto. And only just now has the technology like ChatGPT caught up so that we can, begin to do some of the things that we were thinking about in 2015, 2016. So it's, ChatGPT and things like that are really, to me as a software engineer, those are tools that I can now take, import into Bloq, and build some really interesting projects based off that. So it's all just piling up cool tools in a toolbox. I also love doing, construction, like home improvement type stuff. Whenever there's a new tool at Home Depot, that like makes something 100x easier, I've got to buy it. And that's the way I feel about ChatGPT and Stable Diffusion, the AI art projects, is that it just made several domains 100x easier. And so it's going to apply to crypto UI UX eventually, I feel.
And I'll give another click for detail because Jeff said something important about how we approach DeFi and how we build towards DeFi. And when we built and launched Vesper, it was terrible UI UX, no documentation, no smart contract audits, unknown teams, the full panoply in the early days of DeFi. We obviously turned that around, known team, over 50 audits. That takes time and money. Full documentation and UI UX that we think is state of the art in DeFi. And then we also scored our pools on conservative and aggressive. And two things that came out of this. People didn't care enough about the audits. People didn't care enough about conservative versus aggressive because they would sort rank on the highest yield and go for it. If you think about the risk nature of somebody with digital assets, MetaMask wallet going into DeFi, they're already risk on, right? So the conservative or aggressive is just like, ooh, I want to sort rank for the best. Fast forward to today, those things matter a lot. The fact that we have over 50 audits, our next closest competitor has 3 or 4, and we think about things on a conservative and aggressive scale. That is now, I think, more in focus today than it's ever been before. To say, how do we think about these things? How should we self-insure these things, et cetera? So, that some of that hard work, some of those hard decisions that we made early on are now coming out to be a good thing for making those bets. So.
One of your 4 pillars, we've talked about it constantly when I've had you on, obviously, is tokenization. Do you think that any of the nonsense that we've seen over the past year could impact that or get in the way of us seeing that tokenized future that you envision, mostly because now regulators and legislators might step in and try to prevent that from happening?
I mean, I think the regulators are going to focus on 2 areas: stablecoins and centralized exchanges. And so I think it's really going to affect stablecoins. And if you're a regulated public, like Coinbase, you pretty much have no issues per se. But I think a lot of the other private centralized exchanges might have to up their game. But from what we understand, that they've mostly been working like a public company, think of Kraken, et cetera. But then you see outliers with what happened with Gemini, et cetera. I think, some of that stuff needs to get better, rules and kind of behavioral stuff around that. So yeah, I think we're kind of in this new year post. It doesn't even feel like it's post FTX, but looking ahead past all of FTX. The DeFi components of crypto is probably the piece that people want to gravitate to most, because it's protocols are rules with incentives, right? So they could figure out the rules, figure out the incentives. It's transparent, etc. Hard to do that with a bank or a lender, etc. So I think the logic of that continues to permeate into TradFi and everything else, to say, like, if we had anything close to that, we'd have a better outcome and a better standing today.
Yeah, my answer is similar. It's yes, and that's a good thing. Is like in 2013, which I was already 3 years into crypto, in 2013. March of 2013 were the first Senate hearings for Bitcoin and crypto. And that actually ushered in a new era of regulatory clarity and a new era of investment, and both institutional, retail, professional people entering the space. And so I think we're going to see a repeat of that. We'll see regulatory clarity, and on tokenization, ultimately, I think there'll be an explosion of investments in regulated tokens once all the dust clears. As I've been telling some of the folks connected to Washington, all you need to remove is this one technical detail in regulations: the requirement for an automated trading system, an ATS, to trade stocks on a blockchain. You can Uniswap, a stock token, a regulated equity token, as long as A, the regulations are in place, and B, you remove this ATS rule. So if we get that little technicality out of the way, it's really a green field for regulated equity tokens on Uniswap, where you have a management layer, DCCCC or NASDAQ or NYSE is a manager or owner of that token, and they can start and stop the transfers of that token. This little technical thing that I'm talking about unlocks a lot of investment in the crypto space, unlocks a lot of tokenization, and unlocks a new level of comfort and trust in crypto in general, because you have that regulatory clarity, and because you have the on ramp that's regulated and trusted. So I think that there's going to be some regulatory actions for sure, but once that dust settles, there's going to be so many more people with a higher level. This might sound paradoxical, a higher level of comfort with tokenization and tokens.
I agree with
that, because the noise has been swept out, the chaff has been swept out, and you just have the signal, the wheat remaining.
The flip side of that is it unlocks this incredible potential by just switching that one thing, but it also threatens the largest institutions on the planet by making it easy and completely removing them from the process. We're talking about every payment processor, every Citadel, clearing houses, central banks. So
what's funny is you're absolutely right. What's funny is you're absolutely right. And after 12 years in the space, I'm just going, oh, that's not so obvious. Oh, yes, we know that we're challenging central banks and institutions. And that's just, we got up and we had breakfast and we challenged the central bank, and then we went on with our day.
But that's when I asked Matthew the initial question. Now that I think we have sort of a higher likelihood of that regulatory heavy-handed approach coming, maybe that's not even true. But I mean, these guys are going to, from their cold, dead hands, like Charlton Heston and the NRA, they're not going to let this happen easily.
There was something interesting from the press conference yesterday of the Bitzlato. I don't even know what the exchange is called because it's so obscure. Regulatory enforcement action is one of the quotes from regulators was, we want to get the criminals out of crypto. And I endorse that. I want the criminals out of crypto too.
Yeah.
Arrest the guys that are doing frauds and scams and crime, just like all the laws on the books already engender you to. And so that's a positive thing.
That's interesting because we don't need any more laws to go after criminals and fraud.
Exactly. Yeah.
Right, exactly.
If it's fraud, prosecute it as fraud.
Going back to the tokenization question, I was just thinking about what Jeff was talking about before with synthetics and Maker, and our new primitive metronome is tokenizing and creating synthetics for real world assets, for your house, for your car, for stocks, etc. And the synthetics on top of that, it's almost like a proxy for those assets. Obviously, a digital native asset's a lot easier for the custody and flow on stuff that's a token representing a real world asset. There's a workflow between the token and then the asset, but as these systems and the adoption kind of develops and evolves, the liquidity and the assets on chain are going to be profound, right? And then you still go into the financialization, or all these things still matter, but that's a biggie where real world assets, some people are, we're tokenizing dollars, there's tokenized gold, there's all these different assets that are being tokenized. But once real estate and other, maybe not obvious assets get tokenized, I think it's really gonna go quickly. And I would have imagined this stuff happening before, NFTs or DeFi. If you asked me 5 years ago, I would say this would have been more of a thing. And so, I think directionally you could be right in crypto, and then some of these themes and ecosystems come out of nowhere. DeFi, NFTs, etc. They could definitely surprise you.
Yeah, I can't wait to see which one comes next. You said, we were farming yams and tacos only a couple short years ago, and had our NFT summer and our metaverse fall, and now AI coins are going next. So it'll be interesting to see what this market comes up with. Unfortunately, we are up against time. I'm glad we finally got both of you in the same, as I said, virtual room, but kind of the same room to join. Thank you so much for your commentary and for your vision. I always love talking to both of you because you give me great hope that everything I think is still being built is still realistic and is likely to happen. Where can everybody follow both of you and check out Bloq after this conversation?
Check us out at Bloq.com and some of our projects, Vesper.finance, Metronome.io, Lumerin.io as well.
Yeah, and then we're Matt at Bloq.com, Jeff at Bloq.com, and it's I'll be clear here. It's BLOQ.com.
I know I said the Bloq once earlier, and I almost cringed at myself. But yes, Bloq.
Yeah, and I said that on purpose because it's definitely sticking a finger in that eye.
Yeah, I would imagine so, especially in light of recent events over there, which we've gotten into in the past. And once again, thank you guys both. Everyone else, I will be back tomorrow morning, 9:30 a.m. Eastern Standard Time, with the week in review that we do on Friday. It tends to be one of my favorite days of the week. Gentlemen, thank you once again. Really an honor and a pleasure, and hope to have you both back very, very soon. Everyone,
thanks, Scott.
Have a great day. Thanks, guys.
Bye.
That's dope.